Good morning, good afternoon, good evening, depending on where you are in the world. I'm Andrea Olivar. I work at Solidaridad. And I would like to welcome you on behalf of the three organizations that have commissioned this research: the Global Coffee Platform, IDH, and Solidaridad. And here we are today to talk about value distribution. Could you please go to the next slide? Here is our antitrust statement. For those that want to read it in detail, we will put it in the Q&A function, but I will give you a couple of seconds to glance through it. Next, please. So in the next hour, we will have Marion Feyer-Müller from Le Basic. Le Basic is the organization that commissioned, that carried out the research and developed the simulation tool for value distribution. Marion will be sharing with us the key findings from the report. We also have Tessa Mulderstein. Tessa will be sharing her reflections on behalf of the three organizations that commissioned the research and sharing some of the points where we want to go forward. We will also have, and you will see here, a Q&A session that will be moderated by Annette Pencil from the Global Coffee Platform. We ask you to please put your questions in writing in the Q&A. We will do our best to prioritize them to respond it either by writing or addressing them directly through the speakers in the Q&A session. We have been very, very happy because more than 600 people have registered for this webinar. And we have some of them here already, but some of them won't be able to make it or were not able to make it. So we are recording the session and we will share it with many of you later. So please bear in mind that this session is being recorded. Next, please. Right, but let's go into content. Why have we commissioned this study? So first of all, I think it's not news for the majority of the people that have tuned in that many coffee producers today are not economically viable. At the same time, the coffee sector, the global industry, have made huge commitments, important commitments to work on farmers' prosperity and also on market transparency. Many of the roasters and the traders of our sector have actually signed a declaration in 2019 called the London Declaration. But unfortunately, we haven't been able to make a lot of progress. In some areas we have, in some areas we have done less. The key issue of economic viability remains an issue that hasn't been resolved yet. One of the barriers to move forwards was a lack of information. There's been this lingering lack of knowledge. We have been able to make some progress on the side of living income, but when it came to value, we didn't know that much. This research is one of the first research in the coffee industry that actually analyzes value. And we wanted to answer two questions. One was how the value in the supply chain of coffee is being distributed, and more importantly, how much of the value is actually captured by producers. And this is why we commissioned this study. We wanted to have an objective analysis of the value chain in coffee in the different stages of the stakeholders that are engaged with the value chain. Next, please. So here, the aim of this report is to determine cost, taxes, and margins at each stage of the supply chain, from coffee cultivation to retailers. You will see here in this slide that we have 4 groups of products, and each of these groups have different categories. So if you take ground coffees, for instance, you can have single origin, you have a blend, certified or not certified. And this analysis starts from the product. We analyze more than 40 products in the German market. We selected Germany because it's the largest coffee market in Europe. Germany is also the largest importer of green coffee into Europe. It has a major roasting facility industry and is highly competitive. It operates in the commercial market and coffee is constantly on the promotions. So we also wanted to focus on some producer countries to be able to do the full analysis from coffee cultivation to retailers. These are the 4 countries that we focus on, and they are the 4 out of the top 5 countries that are supplying coffee to Germany. One important element that I would like to highlight with you is that although this study is focusing on Germany and in Brazil, Colombia, Ethiopia, and Vietnam, the results of this study can actually be extrapolated to the coffee global market. So we don't have to do a research of every single value chain. This result will be able to give us a general idea of what happens with value in the coffee sector. Next, please. Right, in terms of methodology, we have the databases that were paid for and public available and for free. In terms of desk research, I think it's important to highlight that the desk research took place in the country, the market side, that one part of the supply chain in Germany, also in origin. And we also were lucky enough to have some data from the 3 organizations that have commissioned the study. Solidaridad, IDH, GCP, we had our own data that we were able to contribute. We also had some interviews with different stakeholders that were involved in the supply chain. And this was really important to us, simply because we wanted to make sure that the results of the research resonated with the reality in the supply chain. We had 3 validation meetings in the last year, and we also had one-to-one interviews with many stakeholders. Next, please. In the interest of time, I'm not going to go through the limitation of the report. You will find this, it has been published as we speak, and I invite you to go to the report. In terms of deliverables, we have 2 important deliverables. On one side, we have the report that has a downward part of it and downward analysis. And basically, this is the analysis of value from the import to Europe to the retailer. We also have 4 country annexes. We call them country capsules for those that are in the coffee sector, that analyzes value in Brazil, Colombia, Ethiopia, and Vietnam. We knew that having a report was a bit static, so we also developed a tool that enabled us to do some simulation of value. So those companies and producers and different stakeholders in the supply chain that are interested to see how value is actually distributed in their own specific supply chains, they can go to the tool and they can do the simulation. But let's start with the context. Next, please. And I would like to welcome Marion, who will go through the findings of the report. Marion, over to you.
Thank you very much, Andrea, for this nice introduction. Hello, everyone. I'm Marion Fej-Muller from BASIC, and I'm here representing BASIC to share with you the key research findings for this study. Next, please. So before going into the results, I just want to have a quick recap on how to read the graph that we are going to share with you afterwards. And bear in mind, as Andrea already said it very well, that they are estimates based on a modelization. So it's not a perfect reflection of the reality. They are still estimates, but they are as close as possible to the reality of the coffee value chain. And again, built on publicly available data and then confronted through an extensive interview process. So if you can click, please, next. First, what we are going to see in the estimates, and also if you go to the report or the online tool, is the value breakdown that you will see on the left of all the graphics. And if you can click, please, first you have in red the first stage, the coffee cultivation stage. So really what happens in the coffee farm and up to the farm gate price, the moment coffee leaves the farm. Then we go into the orange part, the exports, collection and exports. Basically, the supply chain that we have in the country of origin, from the farm gate price up to the moment coffee is on a boat ready for export, so FOB price. Then we move into trade, international transport, and even European logistic, because we in this block of value, we have all the different operation from the moment it leaves the port in the producing countries up to the moment it reaches the factory gate of the roasting factory. Then we go into roasting, so really the process of roasting and finished product manufacturing, making the product available. Then we go into the blue part, the retail. If you can click, please. Yes, retail. So the moment when it's sold to the retailer, the moment it reaches the purchase center of the retailer, up to the moment it is bought by a consumer in Germany in 2021. And when we have two blocks of gray, which correspond to the two taxes that we have first the VAT paid by the consumers, but we are also have between roasting and retail, the German coffee tax, which is a specificity of the German market, as I'm sure most of you know, and that is either paid by the roaster or the retailer, depending on the way the supply chain is functioning. We can go into more details for that in the Q&A if needed. And then if you can click, please. So we have, for all these stages, as I said, based on publicly available data, a modelization and estimates of the breakdown of value. So for instance, here we have the example of the ground coffee sold under national brand in a German supermarket in 2021. And for this product, the ground coffee one, we have a price point at 8.06 euro per kilo. That is splitted, as we can see, in terms of value, the way you see on the screen. So about 24% of value accruing to the coffee cultivation stage, a bit less, 21% to retail, then roasting at 13%. And we can highlight to see also the chunk of the share of value that is accruing to the German coffee tax, 27% of it. But what is actually interesting, as Andrea highlighted it, is to go beyond the share of value and detail the share of cost, taxes, and net profit margin that is accruing also to each stage of the supply chain. So if you can click, please. Mirroring the block of value and the value breakdown, we have the cost, taxes, and net profit margin breakdown. So for each, again, block of value, we have, for example, for retail, we have the detail mirroring that in terms of cost, taxes, and net profit margin. And the cost here are seen as aggregated in this graph. But if we go to the online tool, for example, you will see that the costs are actually divided between different costs of operation that are relevant for the stage you are looking at. For example, retail, you have the cost of real estate, you have the cost of the purchasing center, you have the cost of handling the coffee and putting it on the shelf. Same goes for roasting. You have the cost of the energy, you have the cost of labor, you have the cost of the maintenance and the amortization of the machines, and so on and so on. And to be also very clear with what we are going to see afterwards, the only stage for which we don't have the net profit margin, if you can click, please, is the coffee cultivation stage. For this stage specifically, we had to stop at cost on the one side and the net coffee income on the other side. So because we rely mainly on primary data, although there's a lot of primary data, it was unfortunately not possible to inform how the net coffee income is differentiated actually from other sources of income, but also the part of the cost paying actually for the family labor when you are talking of a small farm. So we managed to have the split in terms of cost, taxes, and net profit margin only for the Brazilian farms, the big one that are kind of handled like a company. But for most of the producer profile that we have, and therefore for the aggregated view you have here, we stop at net coffee income. And if we can go now to the next slide, please. This is so really to allow you to understand and have a common understanding of what we see when we look at the graph. And I'm going to present today 3 of the key results. The first one, the economic disconnect that we see through the different economic disconnect we witness through the different estimates between upstream and downstream part of the value chain. Then we will see also the profitability. Actually, our profitability varies depending on format and brands. And the last key result is the no variation, or let's say little if no variation, or in value captured at coffee cultivation stage, knowing that it highlights effectively high differences between producer profiles. So if you can move to the next slide, please. First, with the first driver of the disconnect and how the format impacts actually the share of value. Here we see 3 products. We focus on 3 products, but as Andrea said, there's many more in the report and the online tool. You have here on the screen the breakdown in terms of costs, taxes, and net profit margin for ground coffee sold under national brand, soft pods sold under national brand in the middle, and capsules sold under national brands on the right. Again, in Germany in 2021. So the first thing we see here is clearly a kind of ladder that we have in terms of final price to the consumer. Ground coffee, soft pod, and capsule have very different prices to the consumers. When you look beyond these prices that are different, you have cost structure that is different. We clearly see with these estimates that the cost structure of retail, but maybe most to the point of roasting, is different for the different products. It can be explained, for example, if we focus on capsule, where the packaging are very different for the capsules. We also have all of the other costs, most fixed costs. I'm thinking about the R&D, the innovation, the advertising, even the sales force that are different when you look at a product like capsule than when you compare it to ground coffee or even soft pods. And the way we allocate those costs, those fixed costs, is that we allocate them to the products with the higher value. So this also, on top of industrial costs that are effectively different, there's also the way of allocating the fixed costs that are different between the products depending on the value they actually generate. And if we focus now, when we see different cost structure that we have at the downstream part, it's terrific to compare that to what we see here on the graph on the upstream parts. So first we can see it's quite squeezed when we look at that and we compare the 3. But if we focus on coffee cultivation, we see that there is, again, little, if no variation at what we see at coffee cultivation. The differences we see in terms of costs for coffee cultivation is mostly relating to the different mix of country of origin that we have in the 3. For instance, for ground coffee, we mostly have coffee coming from Brazil and Vietnam, 2 of the 4 countries we studied within the scope of this study. When we compare that to capsules or even to soft pods, we have again a weighted average of the different of the 4 countries of production that we have in the scope of the study. So really, first message we wanted to share with you that is backed from what we studied in the report is the disconnect that we have between a downstream that actually varies the cost structure depending on the formats and an upstream that is mostly flat across formats. If we now move to the next slide, please. We wanted to focus on this slide on profitability and the way it varies depending on formats. So here you have a graph summarizing how profitability varies depending on formats. So you have the 4 formats here on the left, so ground coffee, whole beans, soft pods, and capsule. And you have the 4 stages for which we have the net profit margin informed. So first, collection and export, then trade and international transport, roasting, yes, and retail. And what we see is that, again, format, depending on formats, the profitability that we see in terms of euro per kilo varies a lot. For instance, when you look at ground coffee, you have 8 cents in euro per kilo of profit, net profit margin generated at roasting stage and at retail, and you have up to 35 euro per kilo when you look at soft pod for roasting, or 1.64 euro per kilo when you look at capsule for roasting. Same for retail. 1.86 euro per kilo of profits generated at retail on soft pods, and 7.52 euro per kilo generated by retail as profits on the sales of capsule in Germany 2021. This increase in profitability highlights what we kind of started to see before, is that it's mostly at the downstream that we see a change in, and is mostly relating to what is captured at downstream. We have something that is more linked actually to brand image, to the innovation capacity, to the products sold to the consumer, rather to the origin and the coffee cultivation per se. And the last thing we wanted to highlight on this slide is then, yes, profitability increase when you look at the different formats, but it's also interesting to compare that to the market share that the format actually represents on the German market for coffee. Again, brown coffee, little profitability, but on 41% of the sales in coffee in Germany 2021, when soft pods and capsules represent respectively 11% and 12% of the market share. So that also is to bear in mind that what we see in terms of profitability also have to be understood in the biggest frame of what the different formats represent in terms of market share. And one quick word I wanted again to share is that this variation that we see in terms of formats and disconnects for the products sold under national brands also applies to the product that we sold under private labels. We are not going to share everything today, but again, if you go through the report or in the online tool, you will see that this broad key drivers of analysis also apply to what we see on private labels, although the price point is a bit lower. And if we could now move to the next slide, please. we wanted to focus as BASIC on the differences between producer profiles. Again, what we saw in the first two slides is the little, if no, variation that we have at coffee cultivation stage. But it's interesting to go beyond this average at coffee cultivation stage. And when we effectively focus on a country and look at the different producer profile that we have within one country, we see differences appearing. So if you can click, please. You have here, for example, for instance, the example for the different producer profiles we managed to inform in Brazil. So we managed to inform 5 categories of farms. Here we divided them kind of simply by size, but we know it's much more complicated than just the size of the land that the coffee farm owns. You have 5 type of farms, let's say. The 4 on the left are the smallest ones, from under 5 hectares up to 50 hectares. So a difference here. And split between the 4. And then on the right, you have the farm that are the biggest one that are, as I said before, kind of more under like a company with net profit margin and people labor paid for. What we see here is that we have a different cost structure. We simplify it. We have the cost structure in dark red, and we see that the cost structure, the part of the dark red, is actually different when you look at the different producer profiles. Although there is no hard fact that the price paid at farm gate is differentiated between the different type of farms. So we have, if I put here more simply, kind of the farm gate price paid to the farmer, although the structure of the farm is significantly different, what we see in terms of cost structure. And that highlights what we have in lighter red, the net coffee income that is generated. And we see that the capacity to generate a net income on the coffee cultivation is very different depending on the producer profile. And again, different if you specify, if you focus on the biggest farm, which for them, we could actually inform the income tax and the net profit margin. So really, we are highlighting here the differences we have in terms of cost structure and the capacity of the farmer to bear to cover the cost of production they have, specifically the family labor cost that is again not differentiated when you look only at net coffee income. And with that, I'm finishing with the key results, and I'd like to give the floor to Tessa to continue.
Yeah, thanks a lot for that, Marion. And it's great to see these results. And you've only had a flavor of what is in the report. It really goes down to a lot of detail, really looking at the different, not only the different products or the different sales channels, but definitely also, as Marion said, the different different farmer profiles that we're looking at in the different countries. So really a wealth of information there. However, from that, what does it mean? What are the big takeaways? How do we bring things forward? So I will spend some time on thinking through the reflections of this consortium, but also what would we recommend for the sector moving forward. And well, following from there, there will be some next steps. So please to the next slide. So the first one, which is quite an important one, is that there's enough value in the coffee sector for all actors to make a profit. However, and that goes to Marion's first point, value addition in the supply chain does not necessarily make its way to farmers, right? So what we see happening in the end of the supply chain downstream doesn't necessarily make a difference upstream. Why is this so important? It means we're talking about not only value addition, but definitely also about value distribution. The second one, which also goes back to what Marion was saying, but really has a big impact on the ability to really look at reward systems at farm, is the inability or the undervaluation of family labor. We cannot, as of yet, quantify it. That does mean that it's also not possible to fairly reward labor through pricing. That is really quite a significant finding, might not be new to many of you, but as you can imagine, internally, we've had a lot of discussions around this. So in general, this is definitely something that needs attention. The third reflection that we had as a consortium is something that came out of the many interviews that were done. It's about the need for a portfolio management and risk management at every stage of the supply chain. And it is actually happening in many stages of the supply chain. So one of the things that we've seen is an allocation of fixed costs to the product categories that yield the highest margins. Well, that's great and that's important. The question you can ask is, can you do this at every stage of the supply chain? And the answer is that it's typically much more difficult to do this at farm level. So how can we think around risk management, risk distribution, portfolio management, as much as thinking around value distribution? Then the fourth one is that what you will see in the report and what was also shown in the graphs just now is that the actual margins made at collection and export and the actual total costs are typically relatively low as compared to other stages in the supply chain. However, given that one of the conclusions is that value addition downstream does not lead right now directly to more prosperity at farm level, we need to think around mechanisms to make that work. And in that, collection and export intermediaries, in all the diversity that they are there, will have a crucial role to play. So we really need to make sure that every step of the supply chain is on board, but particularly this group really has the ability to translate between downstream and upstream. Then as a fifth conclusion, which won't surprise many people, I would say, is that a single conclusion on coffee cultivation really doesn't do justice at the diversity that we see in origins and even within origins at different type of farms. We've tried to cover it by doing the annexes in the different countries, by building the archetypes within these countries, but there is no way to do justice for every single different farm type that's there. That also means that in whatever we'll do next, there is a need for contextualization. That is not just for those 4 countries that we've used in the study, that goes across the board. There is a need to find a connection between the larger systemic mechanisms that we're talking about, but then the reality on the ground with the farms. And then as a final one, and I think this is really quite important, this is not a standalone piece of work. There's a lot happening around living income, and it was alluded to the London Declaration, the work that the Coffee Public-Private Task Force is doing, but also the work that's being done under the GCP around living income, and even things like big living income, living wage summits that are being organized. So this is not a standalone piece of work. it relates back to some of the legislation that's coming in now around due diligence that also looks at farmer prosperity. So this is an opportunity in a larger field of movement where we can really use this to as a basis to think around how can we really work on farmer prosperity in a different way. So those are the reflections of the consortium. We are happy to discuss them further, but let's move on now to the recommendations that follow from that. So again, as a consortium, we have 3 recommendations. We would recommend that the coffee sector moves ahead to collectively define a set of sourcing principles that include value distribution. So to really think around how do we principally source so that we can work on this disconnect. Of course, making that practical means that there is a need to think around mechanisms to then actually do it. So we would recommend that this is accompanied by a commitment to develop an industry-preferred mechanism or mechanisms to distribute value. So on the one hand, it's the principles, on the other hand, it's the practice. Then how this works, that we can only find out by testing in partnership together the mechanisms for adding, creating, and transferring value in the supply chain. These will probably be tested in separate supply chains, ensuring that, that we try every single option, but then to bring it back to the group to really think, if we want to scale this, then what is our industry preferred mechanism or set of mechanisms to distribute value? So with that, I'll be handing over for the Q&A. But really for us as a consortium, this is what we would recommend for the sector. And we would hope that we can have further discussions with you to think this through more and to see how this could become a reality. On to the next one, and Annette for the Q&A.
Great. Thank you very much. A lot of questions came already through. And I invite everybody here with us in the webinar to think more about what are the questions that might not have been put in the question and answer chat, and what are those that are really burning for yourselves. We have now some time to look at some of the questions. I invite you to also look at the answered questions. There are 12 currently there. Very good answers already online. But let's look at some of those questions that we haven't heard a reflection or an answer on. So what I pulled out here is a question related to the ongoing regulatory developments. Since this study looks at an EU country, how do you think EUDR will shift this value distribution, especially for producers? So I'm happy to have my panelists here with me. That is Andrea from Solidaridad, Tessa from IDH, and also Christophe and Marion from BASIC, our consultants here. Andrea, would you like to take a stab at the question around EUDR and implications on value distribution further down?
I would say that the implication, but I would like to actually hear what are the thoughts of Marion and Christophe that are probably asked this quite often. But if we look at value as the 3 components that were discussed or mentioned, then cost, taxes, to be able to have a net profit margin, or in the case of some producers, some net income. So if your cost increase, then your net income for those producers that are not accounting level will be smaller. And then the net profit margin for the producers such as Brazil will be, again, smaller. So if the cost increase, and we think that EUDR is going to be potentially a cost for farmers, then it's very likely that the value that they are capturing is going to be affected. I think I will say in general, but Marion and Christophe, have you, perhaps Tessa also has her own views, but I think in simple technical terms, I would say that is probably one of the risks that we have the EUDR. We really like the policy is where we want to head towards, where sustainability is a norm, but then will this have a cost into producers is one of the key questions. Marion and Christophe?
Yes. thank you, Andrea, and thank you very much for this question. It is indeed a question that we are often asked. It's a burning question. We didn't study it for the case specific of coffee, but what we studied for other commodities is clearly that UDR, it's going to generate compliance costs that are mostly linked at upstream stages, because there is, as you know, the fact on traceability and so on. Of course, it's not only for upstream, it's also for the trade, but there's a costs that are mostly related to what's happening in the origin countries. And the question is, who is going to bear those costs? What we understood is that it's not simply a cost that although you have compliant costs, there's not, as we see in the graph, there's no simple mechanism where, because you have rising costs, it's going to be transferred up to the prices, and then you have a prices that is actually reflecting on all those rising costs. The fact is actually UDR is going more to be a legal requirements, and we have heard that then the market is not going to pay more for what is now considered to be legal, a kind of a basis requirement, basis legal requirement for entering the EU market. Therefore, it's clearly a glass ceiling that is put on the moment where it's going to be paid for, this coffee or this cocoa or the other commodities, and then it puts a pressure on the upstream part of the chain. Question is, what we see, for example, in cocoa is intention from the producing countries to have more of a stable and public traceability system that actually diminish the cost, because it's only one moment, one system that actually look at the traceability. Is this something that is interesting maybe to see what is happening in coffee? I'm not completely knowledgeable on what is happening in coffee, but yeah, to simply say that, yes, there is going to be UDR compliant costs. It's going to affect, of course, the farmers, and we have to be careful of how it's going to be handled by all the different actors downstream.
Thank you very much, Marion, and also Andrea, for shedding light into what is a very burning question for everybody who is interested in continue exporting into Europe, or also receiving the coffee that the consumers love here. We have more questions, so let's go through a couple of more to answer them live here as much as possible. There is a question that has already been answered by Basik. I think it's still good to pull this out. Is the cost of production at farm level calculated on the basis of ongoing labor rates or on the basis of living wage rates? Because if it is not at a living wage rate, aren't you just moving the true cost away from unpaid family labor to unpaid wage workers? So that's a very interesting discussion that is ongoing, not only in the coffee sector, but also in many other sectors that have a similar pattern than coffee. I would like to invite my colleagues from the consortium here. Tessa, what are your thoughts on that beyond the answers that Christoph has already put in the answer box here for everybody?
Yeah, so I think it's a very valid question. It's also a difficult question in the sense that obviously that's what you would want. I don't think that's what we have done. I think it's based on an actual cost calculation that we have from specific databases. But I would say it's what we should aspire to do, right? As we want to work on living incomes, we also want to work on total farm incomes that are sufficient to remunerate everybody working at that farm towards a decent livelihood. So I think it's a very fair point, but I don't think, well, I know it's not what is in there now. So it's something to aspire to, something to keep in mind. And yeah, part of a reality, unfortunately, that we face today.
Mm-hmm. And then having also the information, the data available at public, either at a public level or at a scrutiny level that would allow us or our colleagues from the consultancy here to really make use of them. No, so that is something certainly that is not current reality. Andrea, would you like to share your additional reflections on that?
Yeah,
complex
I think,
question.
Yeah, it is a complex question, and I think for person who asked it is a question that bothered us a lot. We went through different scenarios. It was a very difficult one because, as Tessa said, these are real costs, yeah? And what happens is that only one of the countries in Colombia, farmers were collecting and estimating data on, at least on their own costs. Yeah, so not just what they pay for. Let's say in the scenario of Brazil, you have someone that work at your farm. You pay them a wage. If it's the living income wage or the real wage, this was the real wage. But the situation is even more serious, which is that in the farms where informal and family labor is the main labor, we weren't able to have that data simply because we are not collecting it. We only were able to do so in Colombia. Therefore, we couldn't do net profit margin for producers, and that's why we call it net income. And it's the income from coffee that remains after the costs are reduced. So this is something important. We're not even, in many cases, we're not able to put a cost to family labor. Therefore, and that's the minimum that should be. Therefore, living wages is the next step. And that's why I think Tessa is saying it's an aspiration. This is where we should be. But at the moment, the focus was on the real cost of the farm that were actually being registered and producers were able to account for.
Thanks, Andrea. Let's get some help here from our colleagues. Marlies, would you like to pull out another question? There are many coming now, and perhaps you could help me to pull out one that could be quite relevant to be answered here for the group.
Yes, thank you, Annette. I actually saw an interesting one asking more about the first reflection. So on the piece that of the presentation that Tessa took up. So I'd also like to invite Tessa to respond on that. Whether we can elaborate a bit more on the first reflection related to the sufficient amount of value that is in the coffee market, because that seems, as the question says, it seems very obvious for capsules, but for other products, the margin seems to be a lot smaller. So maybe Tessa, you can elaborate on that one a bit further, and then potentially also other members of the consortium will have something to contribute to that.
Yeah, super. And it's a very good question, I would say. To start with, we have also built one model in which everything was aggregated, right? And if you look at that model, you actually see that there is sufficient value. However, more important, I would say, is what this shows is that you should not just look at one product by one product by one product. It gives us sufficient insight to move next, but actually what's important is the portfolio mix and the ability to move between products. That's what makes it viable for most steps of the supply chain. So it's really that common understanding that we're talking about value, but equally we're talking about portfolio management and we're talking about risk management, because the two do go hand in hand. So yes, it's a conclusion that is quite solid based on if you do a total aggregate, but it actually is a conclusion that is more solid if you look at the total portfolio. Indeed, it looks on specific products, there is much less margin to be made in different stages of the supply chain. But across the portfolio, there is the opportunity to do so if you have the ability to actually manage a diverse portfolio. Not sure if any of the colleagues want to respond to that.
I mean, it's very clear and straightforward, Tessa. That is also, like what we should not forget. Andrea, you said there are certain limitations about the study. I mean, after all, reality is complex, and this is a modeling exercise. Marion, you reflected on that very clearly. But isn't the key question then also, as well as we are learning more and understanding, chopping some, insights into this complexity, what can we do about that? I would like to move us to the next question, because that is more like around, well, what do we do now with this information? Do we need to do more studies? Is there an action point here? Has this I'm reading out the next question. Has this study identified entry points for value redistribution? Where do you think possibilities are to shift value more equally? And how would you come to a common understanding of equal value distribution? That is a quite interesting question. And I'm looking here at my fellow consortium colleagues and also Marion. Mario, would you like to give from the perspective of your analysis an attempt here, and then Andrea and Tessa will fill in.
Thank you, Annette. I really don't think it is my place to start here, so I really would like more to give Tessa, Andrea the floor to that question, if that's okay.
Great, Andrea. What is your perspective?
Nobody wants to answer the question. I will leave Tessa to go through the specific mechanisms. I think we have identified some, and there are some front runners that are already doing it, and there is a work that is already being done at a sector level, and I think that's quite interesting. And Tessa could go into the details. In terms of, do we need more research? Yes. I mean, the more we know, the more precise, great. But I wouldn't go into making a huge investment on more research. That's why I highlighted at the beginning that the results from this study can actually be extrapolated to the global coffee market. We are building knowledge, and that's great. For instance, we have living income benchmarks through the task forces we didn't have before. Now we have this research. The Specialty Coffee Association is also researching. So this is great. We have more information than before. But I don't think we have to have many research to start to act. And I think this is what we are calling upon. I like to focus on something that is procurement practices, which is perhaps the more powerful way to redistribute value, not necessarily with a mechanism that is external to the supply chain, but by setting some minimum standards to raise the floor instead of low, to raise the floor. We're not raising the bar, but we are raising the floor, yeah? And this is important because when you are a producer, you need the conditions to operate, because you don't do portfolio management, because you won't necessarily capture part of that extra value that you have at the top at the retailer side. So we need to have some minimum principles that everyone implement in the coffee sector, that we say, if we want to be sustainable, if we want to be serious, let's work on some minimum procurement practices that will make sure that producers have the environment to operate with lower risk and protecting their income. And I think that is the key thing. We could do more research, but that shouldn't stop us from acting now. And I think otherwise, it will take us 5 years. The London Declaration will have the 10-year anniversary. We'll be still looking for building the knowledge and trying to find some answers. And we have to start before it's too late, I think. But I think Christoph has his hand up, and it might be interesting to listen to him from the point of they have a study of the sectors, so that might bring an interesting perspective.
That's a great one, because I know similar studies have been done in cocoa, including from BASIC. But then let's also have Tessa after that perspective to round off that big question. We want to have 1 or 2 more before we then go to the rest of the program.
Tessa, do you want to go first, or?
Christoph, why don't you go first?
Okay, thanks a lot, Annette.
Yes.
Very quickly, fully agree. First of all, with Andrea, it should not hamper action. What could be the need of further information that should be in parallel to action anyway, because we believe that there is a key building block here that is already quite a bedrock for starting action and discussion. Supplementary data in parallel. First, I think it connects to one question that there is in the chat about extrapolation. I think we should always be careful about extrapolation and have the capacity at least to spot what are the key differences when we're talking about new countries, whether it is of consumption or production, to make sure that we do not draw wrong conclusions on different contexts. So the key bedrock is here. It's just a matter of nuance and having some further insights as of need be. And the last point is about having updated information. We believe that's what we see in cocoa at the moment, for example, but also the case in coffee, that we might be entering quite an unstable, economically at least, and not only, unstable environment for key commodities, with prices going up, downs, a lot of things changes, climate change on top of that. And in that world, we believe that having the capacity also to build common foresight, to be able to say where collectively the different actors want to go, and at least on our side, be able to provide a model that enables not only to understand the current situation, but to have this kind of collective dialogue and a common sense of where people want to go and what are the key structural things that should be maybe changed in order to move in the right direction in this new environment that we're coming into. Thanks a lot.
Great. Thank you very much, Christoph. Tessa, would you like to round us off? I'd like to post one more question before we then move forward.
Yeah, no, I'll keep it short. I think a lot has been said, right? Moving into action now, as much as doing more research. What I would say is one of the things that is going to be crucial, if you want to do value distribution, you actually need to know where you're sourcing from, right? So transparency is going to be very key in any effort that we take. And that could take the simple form of, let's try to do this for one product in your portfolio. Let's try to see if you can actually get from your end product to your start consumer, and what then would it take, right? So on top of the collective work that needs to happen, where the principles, those are the building blocks, those are the starting points. But then next to that, if you actually want to do it, let's start somewhere, right? Let's see what level of transparency we have, and therefore we would need to add and take it from there. So it's in the trialing on the one hand, and then the collective definition of principles on the other hand, that the total action will come.
Very good. And this is part of the encapsulated recommendations from the group here as well. I know we want to move on. We have time for one more question. I'd like to ask our colleague Markus, who's been busily already answering many of the questions that you all have posed. Markus, is there one question that springs to your eyes which we should answer live here?
Thank you very much, Annette. I think there are a few questions that we might try to wrap together. People asking about if the consortium already has ideas on what such mechanisms could look like, and what incentives we recommend, or if we recommend incentives at all. Also, if there are barriers that we foresee for implementing this, or an industry-wide change on sourcing practices.
And somebody also put out here, it's good to act, but what's the right timing for that? No, so these are all linked together. Andrea, would you like to take a stab at that very briefly, Tessa as well, and then we round it off with the next steps, which are also interesting.
Well, this is part of the next step slide. So that's how we were going to close
Let's pull this out. Let's pull this out.
So yeah, so here we are. So I think one of the next steps is that for us as a consortium, we want to particularly focus on these two avenues that we have been shortly mentioning throughout the webinar. In one side, we want to try to focus on how can we collectively define procurement principles, a minimum of procurement principles to be followed by the sector. And hopefully this can be done through non-competitive collaboration through the spaces that we already have. So that's why partly we're working with the GCP in this assignment to see if it's possible to do this through the Global Coffee Platform. But not only that, we have other avenues, and everyone will be welcome to work on this with us. The second avenue is what Tessa was mentioning and mentioned before, which was more about, can we actually start to look at mechanisms to redistribute value and look at opportunities for shifting the current practices and seeing if it's possible to take some of the value from other parts of the supply chain to move out to producers. In terms of incentives, of course, producers should have an incentive to work in the coffee value chain and deliver that coffee, but it somehow seems like it shouldn't be an incentive, but it should be the right way to pay and to make a net profit margin from the coffee that you are delivering. So yes, incentives are important, but I suppose the incentives for me are more a priority for the incentive for the companies, for the exporters, the importers, the retailers to actually work on value distribution. I would say that on that side, we need more incentives. At the producer side, it should be, I don't think it has to be questioned that if you are delivering a good, you should be covering your cost. You should be having a positive interaction from your transaction in the supply chain. Tessa, perhaps would you like to complement?
Yeah, no, absolutely. I think, and this also goes to the last reflection. This is not a standalone piece, right? So there's a lot happening in the world. There's existing commitments or existing roadmaps for the coffee sector to move towards farmer prosperity. There is the EU CSDDD coming on, the reporting directive. So there's a lot happening in the field to which value distribution and thinking through and using this information, this set of data, as ways to additionally think around how to create farmer prosperity can really help in that sense as well. So I would really like to vouch that this is important. It's important for the health of the sector, but it's also something that you see a much bigger drive towards working on farmer prosperity as quite central to doing business. So this is another way in which we can do that. It's an opportunity, or it should be an opportunity to the least.
And perhaps as a takeaway here for everybody to further think about, and then to roll up the sleeves, because we need to share more information. This study, this report is going to be shared and also discussed in coffee producing countries, partly supported by the Global Coffee Platform and the network, and partly supported also through the colleagues here from IDH and Solidaridad in some of the other countries. You know, like, we need to share this information and then think like, okay, so as part of the bigger picture and this daunting task of how do we ensure an economic viable coffee sector for everybody, yeah, for the farmers, for the workers, for the farmers, for everybody else, what are the complementary pathways and strategies that need to be put into marching at an accelerated speed? So very much looking forward to taking this forward, to have more questions and provocative thoughts here from everybody online. We're getting to the end of our webinar. There are many questions that couldn't be answered, but please rest assured that we are going to take them up as part of this dialogue that we are looking forward in this group, and to contribute to a positive development of our sector.
Thank you, Annette, and thank you to everyone who asked questions. As Annette said, we will do our best to reply to them. Many were answered, so very good, and we specifically dedicated to have the majority of this webinar to ask your questions, so it was a little bit less static and more interactive. The teams of IDH, Global Coffee Platform, and Solidaridad will be in the next 2 weeks busy in Amsterdam, in Denmark, and please do reach out to us. I think we want to continue the conversation with key players, people that are interested in joining forces with us and working on value distribution. We will also have a space in Switzerland in October around the Swiss Coffee Conference of the CTA to discuss this issue and to start to align how can we move forward collectively. And we're really hoping that key stakeholders join us in the next 18 months to see how can we work on value distribution. I would like to close the webinar by saying one important thing, which is the conclusion of the report. We can conclude that there is enough value in the supply chains that we analyzed, and that there are also opportunities to redistribute value. So this is where we want to work in the next 18 months. So thank you to everyone. Our time has finished, and thank you for everyone that registered as well. We will endeavor to send the webinar recording to as many people as we can. Thank you very much and have a good day.